What's up, traders? Anthony Crudele here, and welcome to 10-Minute Technicals. In today's video, I'm going to go over how you can use Bollinger Bands to identify the current market environment. Now, first off, many of you are wondering, Anthony, why do I need to know about identifying the market environment? I'm a short-term scalper or swing trader. My strategy gives me a signal. I trade it. I follow my strategy. Well, I understand that. And that's important that you do that. But in order to become a successful trader, it is about becoming the best executor of your strategy. And many of you probably have really good strategies, but you're not executing them as efficiently as you would like. I can relate to this. Back in my early days, I really thought I had a great strategy, and I did. And I would go out there and I would make money 8 out of 10 days, 15 out of 20 days. And I'd look back and barely make money. And I'd say to myself, what is the missing element here? I'm doing everything I'm supposed to. I'm following my strategy. I believe in it. Over time, I'm actually winning more days than I'm losing, but I'm not really making money. It's because I'm not capitalizing enough on the days that when I'm winning and things are showing me everything I need the market to show me, that I'm not making more than I should be. And the days that I'm wrong, I'm losing equivalent to what I'm making. And so it ends up just becoming basically a chop fest for you and your P&L. And you never truly get over that hump until you start identifying market environment. So how do you do that? Well, first off, what you're going to look at is a daily chart. I use candlesticks or bar charts or hollow candles. You don't want to use a line chart or a tick chart. You just want to use a straight up daily chart. I have the E-mini NASDAQ up here, and this is for any market. I use this for stocks, crypto, metals, oil, doesn't matter. This is something that is transferable to any market that you're trading. I use a 20-period 3 standard deviation Bollinger Band, and I do not use the middle Bollinger Band. I don't need it. I really don't see any reason for the middle Bollinger Band for this specific understanding of market environment. So what am I looking for when it comes to market environment? I want to understand if we're going into consolidation. That's that sideways choppy tape that coming into the day, if I think we're in consolidation, I need to really be small or not trade it. I want to know if we get a trend day up, is it within primary trend? Does this thing have potential legs? Do I want to try and fade it, or do I only want to stick with it, or vice versa to a downward trend? If I get a trend day down that's setting up in a bear market, do I want to try and fade it, or do I only want to look for trades to go with it? This is so important because understanding market environment will help you become a better executor by understanding position sizing. That's the key. In my career, and probably in many of your journals and everything that you put into your homework and you look out at what you're doing, you probably have realized that your winning days are never big enough and your losing days are too big, right? And so how do you narrow that gap? I go back to understanding market environment, but it comes down to position sizing, right? Some will argue that you always want to be the same position size in every single trade. And I will argue back and say, not every trade's the same. Why would I trade every trade the same? If we're in an upward trend and the primary trend is a bull market and I get a short signal and the market's breaking out, why would I trade that the same way as a buy signal in primary trend? I wouldn't, right? And so that's my number one always fight back on that type of style, because my short-term strategy, although it may be good and that trade might be a loser, even though I'm getting a short in an upward trend, it's still part of my strategy. I need to take that trade. Well, it goes back to, I need to remove some of these losses. I need to reduce the amount of loss. And even if it's a winner, great. I have a winner that's going against primary trend. That's fine. I'll take the win. But ultimately, I want to reduce exposure against market environments that are not conducive to my short-term signals. This is so important. So first off, we're going to look at sideways consolidation days. How do I identify them? When you look at your charts, I have up here on the screen, I highlighted this area here in the E-mini NASDAQ to just show you that anytime the Bollinger Bands are just flat and they're not doing anything, you're in a consolidation. Look at this. You've had probably equal amount of red to green days. Maybe even it looks almost a touch more red than green. And ultimately, yeah, we did rotate a little bit lower. But nonetheless, I mean, you could have made money trading either side. So when I identify that we're in a consolidation and I see this, and who knows, it can go on for weeks or months. Once I see this happen, I'm going to be smaller and I'm going to take both sides of my short-term strategy. I'm not going to favor longs. I'm not going to favor shorts. I'm going to trade both sides, but I'm going to want to see confirmation in the short-term charts to help me better execute during the day. So you don't favor any side, but I'm just going to take my size down a little bit. I'm going to wait for confirmations, and I'm really not going to chase anything either. I'm not going to chase a breakout higher. I'm not going to chase a breakout lower. We're not in that type of mode. The market is just in a straight up consolidation. That's the first look. The second look, what we're going to look at is when we get out of that consolidation period, right? So you can see here I highlighted this area. Now, when the Bollinger Bands start to open up like a mouth, like we see here, what does that mean? That means we're in range expansion. Now, there's two types of range expansion. One is range expansion back into primary trend. So in this particular case, this is range expansion back into primary trend. Primary trend is higher in the E-mini NASDAQ. Okay, argue that all you want. You're not going to win, right? We're in a bull market. If we pull back into primary trend, we're expanding the ranges because volatility is increasing. How do we know that? Because the Bollinger Bands are getting wider. They're telling us that, right? They're a lagging indicator, but as they are widening, they're trying to keep pace into a 20-period 3 standard deviation, a 3 standard deviation move away from that middle Bollinger Band, which we don't see, but that's what you're looking at. And so when you get a market that's hugging the bottom Bollinger Band and it's going down back in primary trend, you do not want to look really for longs. Why do you want to try and pick a bottom? We don't know when that's going to end. We don't know. I'm going to show you where I think it may end, but we don't know on the way down. So what am I looking for? I'm only looking for shorts. So when I get into my short-term day trading strategy or swing trades, I am only looking on one direction and I'm going to be more aggressive. Now, mind you, if I get a counter trend trade, maybe I take it in my strategy, but I'm going to trade it smaller. It's about reducing your losses and maximizing your winners. So if the market is expanding outward with the Bollinger Bands and it's hugging that bottom Bollinger Band and they're going out like that, I'm only looking at shorts. I'm very careful at looking at longs. Until when? All of a sudden, the bottom Bollinger Band starts to get flat. Once that Bollinger Band gets flat and you start to see mean reversion, let's move the chart down a little bit and show you what I mean. Let's go back to the current one, right? Here's one where we have mean reversion back, okay, into primary trend. We saw this big one. This was August, right? July into August. Bollinger Bands were going up, okay? And then all of a sudden, that Bollinger Band, that top one, started to come back in. And it started to come back in. That's when all of a sudden we have mean reversion back into primary trend. So now during this time, what are we looking at? Shorts only, shorts only, shorts only. Few days go by after this low. We don't know if it's the low. We don't know if it's going to take out the low. We just don't know. Probably still looking at shorts. All of a sudden, Bollinger Bands start to come back inward. Now the market could potentially go higher. And it did. Top and bottom Bollinger Bands are contracting. Anytime you have volatility contraction, right? Especially in a bull market, you're likely to mean revert back into that bull market primary trend. And that's when the moves can be extremely powerful. Everybody loves to chase rallies and indexes. Once the market thinks it's found a low, it'll chase that rally higher. It just will. And so now I only want to look at longs. Why? Because volatility is decreasing. You can even see that with the VIX. Very similar thought process. I guarantee when you go and look at the VIX, as the VIX started to peak here, and this is the NASDAQ, it's not the S&P, but nonetheless, you can compare it. When the VIX is starting to come back inward, you're starting to see these Bollinger Bands are decreasing too. So you're going to get back into primary trend. Now you're in mean reversion back in primary trend. Okay? It's pretty simple, but it psychologically keeps me out of fading moves when I shouldn't be. And it keeps me, I believe, more on the right side when I think trends are accelerating back in primary trends or reverting back into primary trends. And let's go back and look at a couple scenarios here where this one I really liked. When you go back to look at this one, look at this. Market was going higher, higher, higher. All of a sudden, Bollinger Band peak. Bollinger Band starts to come back inward. Let me stop that there. And then Bollinger Band was already coming inward here. Look at this peak. Right when that peak happened, that's when you saw that little move in the NASDAQ. That may not look like much, but at least I know I'm not fading it here. And all of a sudden, that quick rotation over right here. I mean, look at this. This NASDAQ move was nothing to slouch over. It was still 700 points, right? But during this whole rally right in here, as Bollinger Bands are expanding, okay, and you see that we're in range expansion upward in primary trend, why am I going to fade that? The only time I look to fade it is when the Bollinger Bands start to contract, and now it takes the steam, it takes the gas out of a momentum trade, and then the momentum starts to come back as we start to pick up and start to go higher again, right? And so In future videos, I'll show you ways to build strategies around this, but this is a simple and has been extremely effective way for me. I've been using this for over 25 years. I've used this to help pit traders prepare. That's how long I've been looking at this. And so it's just a simple tool to help really wrap your head around market environment.